Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. And I was just thinking about new investors when I was a new investor, and I'm sure you guys, a lot of you are new investors. I just wanted to throw together an investing presentation kind of on some things that I've learned over the past and my viewpoints. And they've changed over the years. When I was new, I didn't know anything. And I made my mistakes. I made money and I lost money. It all depends on certain areas. And I'll actually bring up, let me bring this up. Oh, let me bring up another presentation here. Sorry. I'm going to bring up two of them. And I'm going to show you some mistakes that I made and how I corrected them. So I'm going to go over this investing presentation. You won't lose me on this one. I'll just read it kind of side by side here. So I call this investing, and this is how I view investing. It's you get the right sectors that are undervalued. I use ratio analysis. I get the market conditions correct, so your timing's pretty close. That's real estate and demographics that drives that. I research my companies based off technical analysis and fundamentals. I find my best companies. I create a list. I cost average in when the ratios are cheap. And then I hold on and I don't mess with the portfolio. I've noticed the more I mess with the portfolio, the lower the returns. So literally find your good companies, invest in them, and I wouldn't be messing between outperformers and underperformers because they like to swap all over the place throughout the cycle. I just hold on and I don't mess with them. My problem when I was younger is I would mess with things and I would trade in and out. It does not work as well as sitting with these and riding the big move, getting the 1,000 or 2,000 or 3,000% gains. Now here's what you're going to realize when you start investing for a while. What I realized is that how I invest, that view, is basically the best thing you can do. That's what I found. There is no better format for investing than following that. You find the cheap, undervalued companies, you do your technical analysis, and you stay invested until they become overvalued. That is all you do. Now, that is for cyclical commodity type companies. There's other companies that you can buy and hold for the rest of your life. That's what Warren Buffett would recommend, and I'll get to that. And here's another thing that I realized. Knowing more news will not help you. You have to go under the big general trend, the big fundamental structural moves, the demand, supply, and the market conditions that move the investments that you're in. Knowing short-term news is not going to help you. In fact, it's probably going to hurt you. And again, knowing the news before it even came out, it's not going to help you. You don't know which way the market's going to push it. You could know the news and it's like, I don't know which way this is going to go unless it's a blowout quarter. But if it's something that's like a somewhat of an outperformance, you don't know if that's been priced in or not. You don't know if people are just going to sell it. It's really hard to know. And news is just a short-term movement. It doesn't really mean much. It's just short-term. And the long-term move is what has higher rewards and higher probabilities. Go after the big rewards with higher probability. Why would you not take that bet? So that's what I do. I take the bet and then I hold on. But it's going to take years to manifest. It's not going to take weeks. It's not going to take months. And you may be happy with 100% gain, but if you hold on like you would that billionaire investors do, they ride it for the big move. They're not in and out. And a lot of them, since they have such high stakes, they can't do that. And just one thing I want to touch on is, I call this watching and knowing, is most everything on YouTube is about short-term news and movements. That's what people report on. And in all honesty, I think for the most part, it's a complete waste of time knowing this. It's not going to get you where you want. You need to think more strategically, less tactically. News is just tactics. It's like, well, how do we play this news? Garbage. What you want to play is the big move. You want to play the undervalued to the overvalued and try to get a 20 bagger or 30 bagger. But it might take 5 to 10 years to do that. So you have to learn as an investor to be patient. And then you need to learn that news is just garbage. If the news impacts the fundamentals of the big structural move, then it means something. But if the news is like, oh, we've got a leak, oh, we've got a little explosion, oh, we've got, a little problem, that's just an event. It will go by. It will pass like a hurricane. Now, a hurricane can cause some damage, but most news isn't going to cause damage. It's just a short-term little blip for a day or two. The way to invest is knowing the market conditions and value. That's how you make money. Big money. Money that's going to change your life and set you up for retirement money. That's the type of money I'm talking about. I'm not talking about I made 100% on AMC going up in 2 days. That's not how you win. Risk-adjusted returns. Low risk, big returns, and it may take time. There's nothing in life that is worth doing that you're going to get in 1 week. You're not going to transform your body in a week. You're not going to transform your portfolio in a week. You're not going to change something in a week. It takes time, and anything worth pursuing in life is going to take time. It's not going to take a week. If anyone can do it in a week, they would do it. You can't build your health. You can't build your body. You can't build your portfolio in a week. And if you're trying to do that, you're probably taking on copious amounts of risk, and it's going to crush you at some point. You want low risk, high return. And sometimes you have to time your buys as best you can using ratios. That's even bringing your risk down even further. You can almost shut off, you basically can shut off all the news and not worry about the rest. If you get your value and market conditions right, you can just shut the news off. It's basically a waste of time. So personal improvement here. I'm talking about you as an investor and me as an investor. Once you understand the big move and the market conditions, and what I mean by that is once you understand the value and you know the market conditions are set, you have a high probability, very high probability of making a lot of money. The rest is on you. And what I mean by you is you are going to have to overcome your natural instincts of fear and greed. Greed is lesser of the two. It's fear that you have to conquer. It's logic versus your emotions. Everyone will struggle with this. I struggle with this sometimes. Most of the time, I'm pretty good. But fear it's in our genetics. We feel it more than greed. Fear, a lot of people fear things more. They're going to feel a down move more than what they feel an up move. They can make 200% or 300% gain, and the 40 or 50% pullback, they're going to fear more. You're going to have to overcome that. These volatile stocks, you're going to have to overcome your fears, and you have to say that I've committed to this ratio investing in values, and the market conditions are still intact. And then you ride that volatility. And it's you that you have to work on. You are going to make or break your returns. You are the one buying and selling these companies. No one else is. And as humans, we are wired with fear outweighing greed dramatically. So it is going to be tough. You're going to be fighting your natural instinct to be fearful and sell. And all it takes is one slip up. One slip up to swap your money into bonds and then see it take off. And you're out. And again, you need to retain yourself to use logic and shut down your emotional wants. That's what you're going to have to steer to is your logic. Now, the worst enemy to gains, again, it's yourself. I can put very good companies in front of you. A lot of people, what happens is they lose interest. It isn't moving fast enough. Their gains aren't there. They sell out, and you could see incredible gains over this next commodity bull market. It's you not knowing what the risk rewards are, being impatient. It all reduces your gains. This is a long-term game, not a short-term game. The short-term people lose their money. Go look at day traders. 80-something% lose all their money, and they can't be day traders. You want to be part of that statistic? I don't. I never tried day trading, and I never will. You're just basically gambling. You might as well just put it on red or black. I mean, pick one and do the roll, and you'll be done. And again, the act of making changes most likely will reduce your gains. By you swapping things around, trading around, more than likely it's going to reduce your gains. Warren Buffett has claimed he would be far richer if he had sold nothing in his life. He just kept everything. And he's talking about multiples richer. This work, and I'm just going to make a disclaimer here, this works very well for companies that control the selling price of their products. It does not work as well for commodities, which are cyclical, but can return insane amounts in very short periods of time. So I wanted to go over this investing thing. I wanted to make sure what you guys need to work on. It's yourself. And the better you are at controlling your emotions, the better you are at using logic, at sticking to a strategy, at portfolio allocation, at looking for your risk-adjusted returns, going after some of these royalties, going after the diversified mining companies, lower risk, higher return, not higher returns, high returns with very low risk. You can find higher returns, but it depends on how much more risk you have to take on. If you're a young investor, sometimes hitting the low risk button on some stuff where you think it could return very well, it's a good strategy to use that. You don't have to go in high risk stuff. If you go into ultra risky stuff, like a bunch of exploration companies, and that's all you have, you're probably not going to win, because a lot of those lose, a lot. And you better have a good winner in there. You better have done your homework. I do a little bit of exploration, but I don't do a ton. If I'm going to do an exploration, there better be a big payout, because I'm not going into something for a small payout and take on all the risk. I'd rather go buy some physical metals, or I'd rather buy some royalty companies, or I'd rather get some diversified mining companies. So the payout has to be overly large in a sector that's way undervalued. And right now, those sectors are oil, uranium, silver, platinum, and copper, I think. Those 5 are really good. Be very selective on what you own. If you don't want to own it for 10 years, I wouldn't buy it. I don't play the short-term moves. I play the long-term big move game. So hopefully this helps you out. If you guys have any questions, put it in the comment section, please. And thank you for listening. This is Finding Value.